Good Thursday evening, and welcome back. This is PreciseAlgorithmTrading.com, and it's Thursday, April 6, 2023. Tomorrow is Good Friday, so the markets are going to be closed. The equities and the options won't be trading in the ETFs, but the E-mini futures contracts, the futures themselves, I believe will be trading through the day. So our automatic trading systems, we will turn them on. That's a user decision to make. I've been through it enough where I run my systems on the holidays because the futures are typically they're trading around the world, and U.S. market being closed doesn't mean that like oil doesn't trade, and the E-mini futures don't trade, and the NASDAQ futures. Now they might be really thin and they might not move very much, and they might not even signal a trade. But if they do, I want to be in, even if it's a loser, because it's part of how an algorithm works. It's part of, you combine a whole lot of trades together to come up with an equity curve. Whether you win or lose, you put all your wins and losses together, and your equity curve, you want it to go up. So I don't want to be missing trades for the sake of just being afraid to be in a market on a partial day. And if something would happen, and like sometimes they close at like 1 or 2 o'clock in the afternoon, and you've got a hanging trade over a weekend, I'm going to just deal with that and let it hang. I don't like that situation, but and I'd say the likelihood is less than 50%. But if that's the case, the market, the E-mini futures market will open back up at 6 p.m. on Sunday, and if it doesn't automatically trade out, which it should, I have to manually close it. So if you don't know what I'm talking about and you're interested, or if you have the system and you're interested in what I'm talking about, drop me a line. It's PreciseAlgorithmTrading@gmail.com, and I can help you through that. So what did the markets do today? Here's the S&P 500, and this is the straight up SPX contract instead of the E-mini futures. The E-mini futures are up here in the left hand corner, and I'm highlighting them. The ES is the S&P 500, the RTY is the Russell 2000, the YM is the Dow, and the NQ is the NASDAQ. And you can see that they're all in red. Well, that's actual overnight action. That's just showing you that the futures are trading now. They're not trading very much. They always trade overnight, except for on the weekends. And some things actually trade through the weekends. Those are things like Bitcoin and derivatives of Bitcoin these days. Oil, I don't know if it trades through the weekend in other countries, and all we get to see is what happens in the U.S. But oil will close and then open back up again at Sunday night as well. So, anyways, I don't want to get too far down the path of that, but understanding how those markets actually keep moving when the U.S. market is closed is kind of important. So, here's the S&P. It was up by 0.36% today. 14 points. The Dow is up by hardly anything, 2.57 points. If you recall, the Dow has really it was the one that needed to get up and going, and it has. Now this is technically a new higher high over what was previous back here on 3.6. So, and now we're consolidating in this level, and in theory, if at a level of consolidation like this, we're either going to, well, not in theory, we're either going to break down or we're going to break higher. And since we're in an uptrend now and on both time frames, I would expect it to break higher, especially since our bullish percent indexes that we'll get into are also showing bullishness. The Russell's been the real laggard as far as it's been behind the most, and it still is. In fact, it's got a down sell arrow today and a sell arrow for the week. So, and that's not going to change, I don't think, because the markets are closed for Good Friday. So, well, actually, I am in a long Russell contract. I'm going to look at that pretty hard and probably set a stop is what I'm going to need to do, or just close it and be done with it and see what happens Monday. Oil, if we can pop to oil pretty quick here, it has broken out higher, and I was expecting it to close this gap, and so I am in a short trade for oil to close the gap, and I'm going to watch this really close because I could be wrong. At all the indicators here, and by the way, I did throw on a different indicator in the middle here just because I want to show that there's multiple ways to look at these things. This is an indicator that combines moving averages. The other one is an indicator that's a lot more flat, and they both give signals. They're both. It's all about how to read a trend, and you can see this has all sorts of signals going on with it. It actually, I think, is pretty cool. We'll look at the transports as well. It actually helps to augment and understand what's going on with the true Momo indicator, which, by the way, the transports are showing 2 negative arrows as well. So I wonder if IYT is doing that, which is the ETF that we trade. So I'm going to have to close IYT because that's my rules, or set a stop underneath here, which is a potential thing to do. And so I don't want to take much more risk in this because I got 2 selling conditions going on here. However, let's flip over. Let's look at bonds since I'm here. Bonds are breaking out to the upside nicely. They got a lot of overhead resistance going on with all these lines, but possibly we could get a pullback before a launch or consolidation in this area. But that's what I'm looking for. In fact, this looks like an inverted head and shoulders pattern to me. I'm not going to draw that for you, but that's what it looks like to me. So let's flip over. Actually, I wanted to do one more thing. The McClellan oscillators. So I've been talking about these. They actually have reversed back up a little bit. The NASDAQ is the one on the bottom, and it crossed the 0 line and it's come back up. For a little context, I mean, you can see it's broken. The S&P has actually broken the upward downward sloping diagonal line of the triangle pattern, and I wanted a little context because we are in very much a back and forth pattern. That is, right now it's got higher lows. Higher lows and equal lows, or arguably equal lows, and higher highs, which this last point was a higher high. Now we've got to get up past that to continue having higher highs, and in order to have an uptrend, you need to continue to have higher highs and higher lows. So in context, if I drag this back in time on, let's say, another corrective period like that one, when we were coming back up and creating new higher highs and higher lows like this, we had some serious volatility, but we still had a higher low than the previous low. So all I wanted to do was show a little context. This thing can go overbought and oversold, or like overextended to the upside and overextended to the downside quite a bit. And you can follow potential bounce areas and potential resistance areas along the way based on these indicators and how they work together, and I think that's pretty useful. And also in conjunction with the bullish percent index charts, which this is the big one from investorsintelligence.com that I don't actually follow all the time because it doesn't move very often, but this is a big deal. It just flipped to a new column of X's on the 4th. So this one's like the granddaddy of them all. It's the one that Investors Intelligence, I believe, created in the first place. to really to demonstrate how these things work. So it is on a new bullish indication on the I'll call it the short term. It is bearish on the intermediate term and potentially longer term, because it's got a column of O's that exceeded to the downside the previous column of O's. Now, if this new column of X's could get up past that level there, then we'd get into a new buy area or new point and figure buy signal for this chart, and that would be bullish long term, and that'd be really bullish. So we got to watch this and see how it goes. I'm going to flip over to stockcharts.com for the other bullish index, bullish percent indexes. That this NYSE is different than the other one. I don't know exactly why, but they do their math differently, and this one moves faster. So this one's in a column of X's, has been for a bit. I don't even know when the reversal happened without digging into this a little bit. But you can see we're in a column of X's. We're down by 1.04% today. Potentially we could roll over here negatively and then pull back up, and it wouldn't take near as much effort to get this chart into a new point and figure buy signal. The NASDAQ has still not pulled back up on a point and figure chart here to show a point and figure or even a new column of X's, let alone a point and figure buy signal. It technically is on a point and figure buy signal because the existing column of O's hasn't exceeded the previous column of O's to the downside. It's exactly the opposite, where the previous column of X's exceeded the column before it. So, or I should say, the most recent column of X's exceeded the previous column before it to the upside. And that's what makes a point and figure buy signal. And I've explained this before, what those things mean, so I need to get an archive on here of all of our previous videos, so you can maybe put it all together for yourselves if any of it's confusing. The S&P 500 bullish percent index is up a little bit today, 0.37%, very little, but still up. The NDX is the NASDAQ 100, pulled back. It won't take much for this one. It's at 63.00. It needs to go past 62.00 to the downside to make a new column of O's. All that would be a short-term weakness. It's still long-term strength because it is in a point and figure buy signal at the moment. And that was the NDX. Let's look at the OEX, which also pulled back 1.56% today. So there is some short-term weakness while the markets are hovering around those areas. I guess I could give you my prognostication, but it's not about prognosticating necessarily. I'm going to go ahead and pull up the E-mini futures for the S&P. That is that diagonal line, and it's hovering in that area, arguably because it's broken out, and now it's pulled back to that area, and it's trying to figure out, well, have I met my target or am I going higher? And off of the indicator in the middle there, the DD trend, all the moving averages are going to the upside properly. The True Momo indicator has everything's right and up, but it's consolidating, and potentially we could get a pullback, I would expect, or just continue to walk sideways until this thing's blown off enough energy to where it could actually take off to the upside again. So otherwise it's going to need to pull back hard, get back into some of these moving averages and these zones, so you get enough bearishness going before this thing could get up and going again to the upside. All right, and then to finish, flip back here and we'll go through our automatic trading system. So these things trade all the way through the day. You turn them on, turn them off every day. At least I do. I think you could probably just turn them on and leave them on, but I like to make sure that the computer's taking breaks. And anyways, I just try to do good computer things that make sense with a computer. I don't like to just trust a computer forever. Anyways, this is the Russell 2000, and it's been sideways as far. This is an equity curve, so it's not what the stock's doing. It's not what the ETF's doing. It's what our actual equity is doing. So it was looking really pretty good when we were getting up and going in that zone there, but then we've pulled back lately. So, whoops. This is what it looks like on a 6-month basis, though. So in 6 months, we're still up nicely, and we just need to get this area right here filled back up and get up and going again, so we can have something like that go on. So this is the NASDAQ, and this is kind of what I'm talking about. So the NASDAQ was like really nice and had pretty good profits in the beginning of the quarter. This is a quarterly chart. And then we've had a down pullback in our equity. Pullbacks are just part of trading. And now in the last, well, actually that's mostly the last day or so, this thing's pulled back up nicely. So what's it look like on a 6-month chart? It looks an awful lot like what that looked like. And from that, we got, a breakout to there. So that's what I'm hoping for and looking for and expecting. And then here's the Dow. No particular order in why I show these things this way, but this is the Dow contract, and it's been a little bit all over the place. We've had nice highs this quarter, but and then on the 6-month chart, it's just fine, but it needs to get, it literally has been almost sideways to down for that whole time now, which is going on a couple months, which is actually common at this time of year. But then what we really want to obviously is get that kind of movement going again. So I'm going to leave you guys with that. Happy Easter, happy Good Friday, and we'll talk to you guys Monday night after the markets resume, and we'll see how things are going. Take care. Have a great weekend.